impact, but I think it's 120 days.
Okay, that's
Yeah.
great.
Now, if it's over, now it's kind of an underwriter discretion. So if that came up, that'd be something, I would talk to our head of underwriting immediately and say, hey, what are you okay with? Because they're gonna wanna look at it and see what's up, you know. And they may wanna they may wanna ask the appraiser, hey, has anything changed type of thing. So it's kind of discretion on the underwriter. Okay. We skipped one key part, termite. Everyone thinks the lender needs a termite report on all loans. That's actually not right. We don't even want them on conventional or FHA loans. We need them every time on VA. You know?
Is that all lenders?
Yeah.
Just
That's all. Well, that's all. No. That's the baseline guidelines. Like Fannie and Freddie don't require a termite, but Home Savings and Trust, if we decided to, we could say, okay, we want termites, or wells, or whoever.
you said that was
That would
for
be considered an overlay.
conventionals and
See, I'm saying people always send me termite reports,
Yeah.
like on deals, no matter what, I get them and we just delete them, or we don't need them, we just don't get into it. But we always need it on VA. And what happens is, what's confusing, and it's a little bit of a silly guideline, is VA will not allow the seller to pay for the termite report. Okay, how much does a termite report cost?
$35.
I'm sorry, the seller.
The buyer.
The buyer, our veteran can't pay for a termite report. Well, it kind of happens all the time, so you just got to head that off the pass, because if we see it in the contract, we try to tell you right away, hey, it looks like the buyer's supposed to pay for the termite, that can't happen, we can't allow it to close like that. So just FYI, comes up. The bigger thing that comes up is, and this is not great for agents, I think it's another poorly written guideline, is we can't approve the loans if there's like an admin fee from the agents on VA. Okay. I bet you they'll look at that at some point, because I think they've been a little bit, I don't see what.
so Remax eats it, right?
I don't know who eats that.
You eat it.
I'll tell you who doesn't eat it is the veteran, because we can't approve their loan and get it closed otherwise, so.
So did you say on FHA, if we have an FHA loan with you, Patrick, you don't want to see a termite?
No.
Okay.
It's not that I don't want to see them.
No, you just don't
We
need
just don't need them. People just send
But
them.
let me ask you a question, if it's in the contract as a yes, do you want to see it then?
I think
Because I've had people where they wanted it, but I know you didn't need
Well,
it, but all of a sudden the lender's calling, or the processor calling and said, hey, we don't need it, but since you checked yes on the contract, now we want to see it.
We haven't been doing that. Now, there was some changes with FHA recently that involved termite, and I don't know exactly what it is. So I think there's more pressure on it, but no, we didn't used to go off the contract at all. Like if you had it in there, we just didn't. It's like to us, it's like a home inspection, or was. Don't know now in the FHA, I'll be shocked if we're getting termites, because I'm not hearing about that. Okay, Veterans Affairs, they really want you to know, they don't warrant the condition of the property. They recommend a home inspection, which you guys are recommending anyway. But we do have to make sure that the VA appraiser, that's our check on making sure the property is in minimum property standards. They are testing the water and the electric, which is different a lot of times than conventional. Okay, they're testing the utilities, the heat and AC. Okay.
Will they test the heat and AC in the off-season, unlike a regular inspector? They won't do it.
They will just try and turn it. I think they're just seeing them turn
It
it
goes on, okay,
on. I don't think they're sitting there with a
With the thermometer.
They're not waiting, no.
okay.
And we're not seeing a lot of reports come
Conditions.
back, so I don't think they're doing a great job of testing, but they're supposed to.
Handrails, that's a big.
Handrails, lock, exposed outlets, it's gotta work. Water damage or threat of mold is unacceptable, can't work with it. And really the problem is when you have mold or, we almost need to have like an expert say, the mold's been remediated. Well, who are you gonna bring in for that? A mold remediation company, and they're gonna say there's a mold problem, you need to remediate. So that's a little bit of a catch-22.
So if you see mold on a property, don't even recommend it to your buyer.
Paint kills over it, white kills.
If you know it's not, like not a big issue, like it's mildew in an area,
Yeah.
and just get it out of there. Just why open that can of worms? Because it's just too. I mean, yeah, if you think something's completely covered in mold, think it would be, you may want to at least have that conversation with the buyer. 'cause
Paul, is that your
it's a
listing
big
up there in the
problem.
picture?
That's my McLean listing.
There you go.
No, that is.
And
that
here's
is
Lamont's
right there.
there, you know, this is Lamont's listing there on the left.
Yeah, I wish.
Okay, here's a big thing for you guys.
Yeah.
Single-family houses, townhouses, condos, they're all cool, okay? So everything you're gonna sell in this area is gonna be normal. If you go like way out of the area or you're doing like a log cabin or something, stuff's supposed to be conforming to the area, but we really don't see any kind of issues. What comes up, and it's actually pretty flexible, is VA does actually have an approved condo list, okay? So I have the link here, and I would just, anytime you want it, we'll just email me and I'll email it to you and you can stick it in your bookmarks. Because if you're gonna go out and show properties, condos, and you're gonna look at 4 or 5, and you might, and it's a veteran buyer, I would just plug them in real quick, because this is how quick it is. Anyone have a condo listing right now or something they want to
Yes.
check? All right, let's check it.
Okay,
On your keyboard.
what do you need, city?
Well, let's see what I'm gonna put the minimum in that it will take. Let's go with, yeah, what city is that?
It's Reston.
That's keyword. I'll see if it'll just give me everything in Reston that's approved. Okay.
Condo name Waterford, starts with a W. There it is, it's me.
Waterford Square. This is what we look at, accepted without conditions.
Yeah. Nice to know,
So
thank
your
you.
money. Now, what happens is, what's better about this, if you have an let's say someone comes in and I don't know if that one's FHA approved or not, we're not gonna look now because it'd take too long. Do you know if it's FHA approved?
I don't know.
Okay.
I'm the listing agent, I don't know if it's.
I would, well, I mean, I would, what's the price point?
$490.
Okay, so, I mean, that's a higher price point, but you still could very well get an FHA offer. I would check at some point. What's nice about VA is they used to use FHA's list. FHA expires condos, okay? I'm sure they have their way of checking too, but if it's on this list, we're good. If it's on the FHA list, even if it's not expired and it says approved, we still have to check things like delinquency rates, of the condo dues, how many owners versus renters. We're not checking anything if it's good with VA. We just know we're clear of that hurdle. Okay? Now, most condos are gonna be on there. What may not be on there is a brand new building. Maybe the builder for some reason didn't get an approval with VA. Not a good idea in this area, but it can happen, so that'd be like a tenant conversion, just a brand new building, it's pre-sale type stuff. You gotta be cautious with that. But just check this thing, and once in a while they're not on there. Okay, so when you have a listing, you might want to check, and also,
Can we just go ahead and check them all? I think you did it for me before. There's a conventional list, isn't there?
no, the conventional, we have to, the FHA list, conventional don't have a list, it's just, and conventional is very flexible on a primary residence. You run into more problems if you're selling a house to an investor. There's a lot of stuff we have to check with conventional. We are still doing a condo questionnaire on conventional loans. We're not talking about conventional loans today. We don't do that condo questionnaire on VA. VA's kind of done that already.
Excellent.
They don't require us to do that.
How often does that list change?
I don't know. I don't know when they go in, like, they don't give us much info. You see here, unavailable, unavailable, unavailable. And because this is all we have to check, this is as far as we go. I just think if I'm showing houses, I would just, what we just did there is perfect. We're going in Reston, just print off a quick list of what's okay. So you're not wasting time, or if you're taking a listing, might as well check, so you're not 10 days into a contract and having to have that conversation with the seller, oh, didn't work, you know, type of thing. It's that quick, you know, but it's important. So let's go. And that's a good question. I wish I knew that. I just, every time we get a contract, we're checking.
Because I didn't know if it'd be smart if you have a listing to say, hey, it's on the VA approved list. Does it change often enough that, or if you say it's on the VA approved list as of this date?
Yeah, I mean,
As a selling
you'd really
point,
get
too.
burned. Yeah, you'd really get burned if
So
it.
don't put it
No, I'm saying like if it came off the list when you're
Right.
in the middle of your listing. I think it changed so infrequently.
Well, I think like in the MLS, it actually has a section where it says, is it approved for these type of loans? Should we even touch that?
I would say what's more important is the FHA one, because that one is, you know, things that, people are very uncertain what what's approved and not
Yeah,
approved for FHA.
and FHA is very weird. I'm trying to think in my mind, Amberley and South Riding, we went on the FHA approved list. I just sold one over there, and the problem is that it's not all of Amberley. It's like
Our
each time the builder builds, there's so many sections of it, and certain sections were approved and certain sections weren't.
So there's confusion on that.
A lot of confusion on that.
And I mean, we've done deals where for some reason some bank or lender didn't know it was on a list and couldn't find it. And I hope we didn't lose deals because we couldn't find it, but sometimes in the FHA list, it's really tricky.
Yeah, there's a lot of condo associations not, I've talked to a couple of them, they're like, we're not going to renew.
It's a few $1,000 minimum.
Even for their owners. The owners are paying them money, and they're not gonna renew, and hurt them to sell their places. Crazy. Great.
Another topic for another day, but did anyone see the Washington Post article today about condos? It's on the front page. See that? It's pretty bad. Condos in general, whenever you're listing or buying condos are great, they're a big part of our market. There's definitely extra complexity with all of them because of exactly what the Post wrote about today. There's just other stuff that can happen. If you own your townhouse or single family house, you control everything. If you own a condo, obviously, there's other people that can factor in to what happens.
What's happening to that guy?
He's checking something.
Oh, I thought he was falling over.
He's checking safety, soundness, and sanitation. Okay. Talked about a little of this already, and some of this is CE stuff that we're not gonna. Okay, credit score, we like to see 620 credit scores. I've definitely seen some banks and mortgage companies advertising 580. What we find is, we will do the one-off, sometimes 580 deal. What we find sometimes when you start getting below 620, there's a lot of times so many other things going on that if they have a 600 or 610, we're usually trying to just take 30, 60, 90 days, 6 months, whatever it takes these guys to get them in position where they are up above 620. They get better pricing. You really start to see that. Where I said the rates don't change much, once you start getting below 620, there's 2 or 3 banks that they kind of market to the lower credit score VA and FHA buyers. And because there's not a lot of competition, they actually do jack up the rate. And it's just not, I don't think it's cool. You really 620 is kind of the market though, okay, with credit score, okay? VA doesn't come in and say, we have a minimum credit score. Whenever you see that, that's because a certain bank has said that, because they want, for a while Chase didn't want below 660. Okay, they were really getting a lot of pressure from the government. They've probably backed off that. Debt to income ratios, they want to see 41% or better. That doesn't mean we don't approve loans with higher than 41%, but we really have to look at the whole file and make sure it makes sense. VA has probably the most flexible debt to income ratio, and we can use the most common sense. What's different about qualifying with VA is we are only looking at one ratio. We don't have that front and back ratio that you hear about lenders talk about. Not that that should enter your mind when you're showing people houses or whatever, but 41% is kind of the magic number. That's what VA likes us to keep the loans under with debt to income ratio. Okay? We have to really explain ourselves with the file and have the customer explain themselves if we're going higher than that. We do it all the time because maybe there's other income in the household we can't count or something in the ratio, but it's just, that's the published one. Just like your other loans, we want to see stable job history for a couple of years. That doesn't mean you have to be on that exact job for 2 years, but if you completely switch careers, if you were a shoe salesman, I'm going to change it because I like baseball. If you're a baseball scout and you turn into a real estate agent, banks, us in general, everybody wants to see 2 years kind of continuity in the same line of work. If you're a student studying business and you come out and you're a first-time home buyer and you work at a job doing business-related activities, we're pretty liberal with it. But if you get a big change with a buyer, I just tell you that because people do buy and sell houses around times when they change jobs. Just, think about that. There may be a red flag going on there. The lender's really got to take a hard look at what their job is and how long they've been on. We don't have a certain amount of savings they have to have, but it's always nice to see they have a couple months of principal, interest, taxes, and insurance, okay? We talked about some weak credit before. VA The guideline is 2 years from bankruptcy, 2 years from foreclosures. They don't really exactly have a guideline on short sales. We like to kind of put it with the 2-year mark. We have approved a few loans shorter than that, but usually that was an active duty person that got relocated and had to sell the other house, and they had big problems with it. When you start to have, as you guys probably know, when you start to have a bankruptcy or foreclosure or short sale inside a 2-year period, usually the credit's kind of messed up anyway. So, but definitely 2 years in the bankruptcies and foreclosures, okay? And we have a lot of explaining to do if it's only been 2 years since a foreclosure. Everything's got to be perfect since, reestablished, and we really need to show that that was probably a one-time event that's not going to reoccur. You know? The borrowers have some work to do, and so does the lender in justifying the loan. Now, the farther you get out and the credit's been reestablished, there's less justification that's needed. Okay, I need to one of my slides. It goes too slow. Okay. I'd like to talk about some of the ways that VA loans will help you sell more houses. And just some neat things during the process that help.
Ask you a question?
Yes.
But it's a married couple, and one's a vet and the other one's not. Do they can you combine incomes, or does it have to be? How does that work?
Yeah, if they're married, that's a great question because it's actually the last thing I remember.
Am I jumping ahead?
No,
Sorry.
you're good. Glad you brought it up.
I just don't remember.
Okay, VA wants you to be married. It's a little bit of an annoying guideline.
Oh, so if you're not married and you're living in sin, you do one more?
I don't know what they think about the sin thing.
Okay.
What the guideline is, I've just never explored. Let's say it's fiance, girlfriend, boyfriend, mom, dad, brother. Number one, you're supposed to be living in the house. So, but let's say what we see all the time is someone's about to get married, move out of the house. You cannot have that person on the loan with you unless you're married, unless it's your spouse.
So you can't count income?
So that's where you'll see sometimes us approving some loans with some really high ratios. And in the file, because we are going after your closing, we're going to explain to VA what we've
We'll
done.
send the marriage license in.
Well, we're just saying, engaged, getting married in a month, the guy that's not on the loan's been working at his job 8 years, makes X amount of money, ballpark. We're not like documenting it fully, but we're explaining ourselves, called compensating factors. Technically, VA doesn't, it's not called compensating factors in my world, it's an FHA term, but that's what I would call them. But you know what happens is borrowers, buyers, lenders, and loan officers actually screw this up all the time. And they'll tell you someone's approved, not realizing that little guideline.
They'll do what?
They'll give you an approval letter or qualification letter saying
They-
someone's approved, you write a contract, and then you're told 3 is we're closing, they can't get a loan.
We get
I've seen
married
that.
real quick.
I see it multiple times a year,
Oh my gosh.
and I have to tell people, you're either screwed, or go to the justice of the peace and get married.
Have you seen that happen?
Oh, I have probably 2 or 3 people a year that, when they call for pre-approval, we tell them, and then they make a decision whether they get married or not. I just say, here's what you're qualified with,
Wow.
here's what you're qualified with and without. If they don't like it, they say, well, we're getting married soon. And I say, well, here's, once you're married, what you'll be qualified for. And then they kind of do the math on that and figure out if they're going to the justice of peace or not, if it's that important to them. But what I'm saying is, you just have to be careful as a realtor, like a listing agent or something, and you see that contract come in, because I've gotten a call, we're not doing the loan, hey Pat, can you take a look at this loan, because we're supposed to close in 3 days, and we just found out they can't because of this blah, blah, blah reason. And it's that reason comes up a fair amount. It was coming up a lot more, but
So there's no way to combine them? You just can't?
Well, if they're both vets, how about if they're both vets?
that's a good question, that's what me and Paul are
Oh, I
talking
thought
about
you
earlier. If they're both veterans, there's a thing that's very uncommonly used called joint eligibility. And Veterans Affairs actually wants to underwrite it in conjunction with us, which is really odd. There's an
Takes
extra
longer.
layer of underwriting, it takes a little longer, it doesn't take them terribly long, but it's, that's hardly ever used. Okay.
And that would be really bad if you accepted a contract.
I think Dallas Homestead here doesn't know that she can't use them like that.
Might not. People get burned. Okay.
Interesting.
When people are active duty, they have what's called a basic housing allowance, and they also have what's BAS.
BAS. BAS.
Yeah, what is that all
Is anyone active duty, are they anyone veteran
Basic
here?
housing allowance is basically like a supplement that I would get if I was not living on base and I chose to live off base. But in order to qualify for BAQ and BAS, you have to be married and live off base.
So you're a veteran?
Yeah.
Okay, and I usually actually start this by asking who's a veteran in here. So BAH, it's not taxed, right? So we count that at 100, we actually gross it up. We give them extra credit for the income. So there's a qualifying thing. BAS is grossed up too, but that's for sustenance, and it's, depending on if you're an officer or listed, it's $200 to $300 a month, so it's not a huge thing to gross up, but we still do gross it up because it's not taxed. Okay? One thing we have here, this is actually a Remax Gateway deal from a long time ago, but I've always used this. This is the old HUD as an example. Crossed out the people involved. I believe this was Remax Gateway. Let's look at the bottom. Can you tell up top? Oh, you can't see I crossed it out. It used to be Remax Gateway. I can't remember who the agent was. And matter of fact, the Remax Gateway was just a listing agent. They didn't do this. We had a buyer come to us with a contract. Usually we're pre-approving them first, but sometimes it's happens. They come to us with a contract. I remember specifically, I think it was $12,000 were coming from the seller. Okay, maybe it's not on this page. Their closing costs were only like $8 grand. Then when I first got the contract, I said, you got way too much money from the seller. There's only a couple things you can do with this, or it's gonna go back to the seller. One thing is you can pay points. They didn't really want to, it wasn't benefiting them at all. They weren't expecting to pay points. In Veterans Affairs guidelines, any money from the seller can go towards paying the debt of a veteran. That's different than conventional FHA loans. You cannot use seller money on any other loans to pay a debt of a veteran, but it's really flexible on VA, so we don't ever have a dime of seller money go back to the seller in a VA case, because we could always find something to do with it. These guys were a fun example because for them, they had like $4 grand. If you look down here, line 1305 or 1306.
Yeah, the visas.
$4,011.57. These guys actually had no debt. They were buying a house, I remember, where the appliances were pulled out or they were really old. So I said, do you have any debt? No, we don't have any debt. Because normally we can get a car bill, a credit card, anything they want to pay. It could be an invoice to a contractor that's about to do carpeting or it's just doing carpeting, whatever it is, judgment. These guys had nothing. So they actually went a couple days before the closing to Home Depot, bought all the stuff they were going to buy anyway after closing with their own cash, and we use the seller money to reimburse them for it at closing because they show up with their credit card bill at closing. So it's really neat in that case. Sometimes we can pay a judgment and get them qualified. We can do some cool stuff. There should never be any dollars of your veterans' negotiated subsidy going back to the seller at closing. Sometimes people aren't paying attention, and it does, but we want to use it up.
So what is the limit on seller?
Good question. It's really flexible. Technically, it's 4%, but what they say is 4% plus all reasonable and customary amounts. So that actually is a little bit of a discretion thing, but 4% in our area more than covers everything in most of the cases. You have to really be selling something in our area less than, I would say, sub 200,000 to where you even really need to have 4% to cover all closing costs and prepaids. Beyond that, you really can get more money. I would say it's closer to around 6%, which is kind of what which is what the FHA guideline is. Bottom line is, if you just write 4%, you're going to be more than covered.
If they have a down payment, can it go towards that?
No, can't go towards down payment, but it can go towards any debt. So if they don't have any debts and they get debt really quick, I don't know anyone that buys a house that doesn't have a moving expense, something around, there's always something that they need.
I've been at settlements where the seller's been like, oh, that's not a reasonable closing cost. Does the seller care that he's like?
But, I mean, they have nothing they can say.
Okay.
If they've agreed to it,
I know.
What's that?
if they've agreed to that money, they
I
can't
know,
say what they can go
but
to.
I'm sure when they wrote the contract, they didn't say, oh, by the way, we're gonna run out some credit card debt, and that 10,000 is gonna go towards that.
I don't know your side of it.
Yeah.
And maybe, but it's completely usable and I don't know how they can fight it. They've already agreed to.
No,
it.
I don't, they just like, turn.
Well, they may be irked by it.
What are you talking about? I was paying your closing costs, not your
Okay.
wreckage or bill or.
You can have multiple, and we're gonna wrap here in a second. You can have multiple VA loans at the same time. This is another big takeaway for you guys when you're doing your marketing, when you're talking to people. I have people, it's like almost every week, that they're unsure if they can use their VA loan, say no, or they didn't know they could use it. They have a house in Washington State, or they have a house in Fairfax, wherever it is, it doesn't matter. They will have some of their entitlement used. If they're interested in buying a new house, and they're unsure whether they're gonna sell their other house or not, or it's in another area, so it's completely out of your control, or they're upside down on it and they can't sell it now, we need to get their certificate of eligibility, which we help them get, or they get, and we do a calculation right on the spot that will tell them how much entitlement they have remaining. And it's different for everybody based on what they have used on that other house. And it's not dollars for dollars, just because our loan limit's $625 in the area, and they have a $250 loan somewhere else, it doesn't mean they only have, $375 left, or whatever that math is, okay? It's something we need to check, so at least they're informed, so they can make a purchasing decision or a waiting decision accordingly. But what you have is a bunch of people who are just unsure, uninformed, or don't even know that they're a lot of times people just think, I can only have one VA loan at a time. So just from a straight up marketing thing, as a realtor, I would use that as one of your touch points, as, hey, did you know, blah, 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 you can have 2 VA loans at the same time. I'm sure you'd rather them just sell their other house, but a lot of times it might be another area. Okay? We use that every year, and it's amazing how many people don't know all their benefits. Okay?
Hey, can you just touch on the bottom one? Borrow more than the limit?
Borrow more than the limit?
Yeah, so how you pay the difference.
Did you say, we touched on it already?
Oh, okay, I'm sorry.
Oh, no, did you say, can we touch on it?
No,
Yeah.
I just wanted to make sure that they
Yes.
heard it.
No, that's another thing. So we talk about, these facts to sell more houses. These are things that you can take and use for marketing. If you're doing messaging or you're building some kind of marketing campaign, maybe sending out something once a month. Borrow more than the limit. We talked about a little bit earlier how you do that, what the down payment calculation is. That's another thing that's not commonly known. A lot of people don't know what the limit is. A lot of people don't know how little their down payment can be with the minimum VA down payment. Okay? I'm going to cruise through a couple things. Okay, on you guys' side, upon pre-approval, you're going to want no closing costs and prepaids generally, so you don't have those issues, although you will be able to use up closing costs that you've negotiated for. What we see more commonly is maybe the closing costs are a little bit more than you thought. A lot of veterans are actually, we do this every day, we're doing veterans loans where they're actually getting their deposit back. And so if they're expecting that, I'm not saying they should be expecting that, but if that's the way the deal is set up, you're obviously going to want to know what kind of seller subsidy to ask for, so that doesn't eat into their earnest money deposit refund. No money down, seller subsidy for closing costs, you're getting your EMD back, there's nothing else for the money to be used on. Okay? Expected time for loan approval, approximately 21 days, we talked about that. MBA does not allow those admin fees when you're writing your contract. Make sure that money's applied. That, 4%. Okay. You're about to wrap.
Quiz.
This is for the CE thing. I'm gonna give you one quiz question. What's the funding fee for a first-time user?
2.15.
With no service-connected disabilities, 2.15%. You guys know the maximum loan on that amount, right? 25.5.
Yeah.
Anything else you guys can think of, question-wise?
Wait a second, did you just say that if there's money left over, you go towards the deposit?
No, I'm saying if, let's say they made $1,000 deposit,
Yeah.
they're tight on cash.
Yeah.
they finance everything, you get a seller subsidy for all the closing costs and prepaid items, they're getting $1,000 back.
Okay,
So just make sure on the upfront end that you either estimated correctly or you talked to me and we estimated correctly on what those closing costs and prepaids are gonna be, because if you get a subsidy for 9 and they're really 10, you got someone who's expecting $1,000 back at closing and they don't get it back.
okay.
It's just not a great way to run the transaction and get referrals, so it's very easy
So
for us
they
to
can get
figure it
their, they
out.
can get their deposit back, you're saying, it's not.
All the time it happens, if the subsidy is
Okay,
covering the thing. The other thing we could do is if it was really important to them, and you couldn't get enough subsidy, we can use rate rebates to sometimes kick in money to pay closing costs. So a lot of them are really truly no money involved. We'd like to see them have money in the bank, it's not required. So it's a very flexible program and it's a sweet deal for the people who have earned the entitlement, which means you have to put your neck on the line at some point. But once you have the entitlement, it's sweet. So, thanks, guys.
thank you.
And I did say, I don't know if you guys